Welcome to Telltales. I'm Mike Nicoletti. Every week, along with my co-hosts Jason Wallace and Hunt Lawrence, we bring you the cash flow memo. Get it at telltales.us. For the next 30 minutes, we're going to dive deep into energy, technology, and healthcare. So download the memo now and get started.
The following conversation is intended for informational purposes only. You should always do your own work to determine if an investment is suitable for you.
Jason, Mike, and I talking this morning decided that our surprises we'd organize in 3 consecutive weeks. And the surprises we do today would be energy and macro related. Then we do tech surprises next week and healthcare surprises the week following, under the theory that we have a 10-minute segment. And if we try to cover all 3, we'd blow through the 10 minutes pretty easily. I would say a surprise, because what we're trying to do is predict things that are against consensus, but have a fair chance of happening. Byron Wien, who was at Morgan Stanley for many years, developed an enviable record of doing that. Morgan Stanley has tried to replace Byron. I think they've given up. But I think, and I think what we're going to wind up with is about 5 surprises each week. What I proposed for one of the surprises this week is, I think that debt held by the public as a percentage of GNP will decline by at least a point. In other words, it'll go from 102 to 101. I think to move it down by more than a point a year would be pretty difficult to do. But what that means is that deficit projected for this year, about $400 billion less than the fiscal year just ended, would have to continue to decline, so that when we get to this time next year with a deficit predicted of, say, 1.1 or 1.2, that would pretty well ensure that number was coming down. And that may turn out to be optimistic, but even with the change in the makeup of the House of Representatives, I don't think additional spending is very likely to happen. It'll get stopped in the Senate, or it'll get stopped by Trump using his veto. Over to you, Mike, on nuclear. And before Mike starts, I'm personally a bit of a skeptic on nuclear. Mike is doing our second prediction, but I'll have some commentary on it when Mike finishes. Go over to you, Mike.
So mine is related to the Nuclear Regulatory Commission. So between 1979 and 2012, they issued 0 construction authorizations for new commercial nuclear power reactors in the United States. Essentially, 3 Mile Island froze the industry. And in 2012, that drought was broken with the Vogtle 3 and 4 units, which received the first construction operating license permit. That was for an AP1000 reactor. And the concept with that is that the first one would be very expensive and future ones would be cheaper. Well, the first one was certainly expensive. The initial estimate was $14 billion or so. It ballooned to $34 billion. And then each additional permit that was issued by the NRC between 2012 and 2018, every one of those has been either terminated by the utility or whoever the sponsor was, or in the case of the 2 that are still alive, one of them being Dominion Power here in Virginia. I'm at Lake Anna, which is where that permit was issued for an additional reactor. None of those are undergoing construction. The second one is down in Florida. Both of those are not under construction. So my prediction here is that in 2026, there will actually be 2 construction permits issued for generation 4 nuclear reactors. So that would be the next generation of reactor. And we've done a little bit of work on this. There's a lot of interest in doing it. It's not clear whether these will be any more economic than the previous ones, but it would be a pretty significant shift if we have 2 construction permits issued next year. And bonus points is that one of those will be a more traditional size reactor and the other will be a small modular reactor.
Over to you, Jason, before I weigh in.
My prediction's a rollover from last year that a private company will achieve nuclear fusion ignition. So what Mike was talking about was fission. You're splitting larger atoms to generate. This is the process that happens in the sun. You're compressing helium and hydrogen isotopes to form a heavier element and release a bunch of energy. A lot of benefits to doing it this way, but it's a much harder process. So it's only been done once by a US national lab. I think a private company, and maybe it's optimistic that 26, but maybe in 27, a private company will achieve this. It's a key milestone, but it's still a long way before that's generating commercial power. Probably in a decade. But it would be a big milestone.
Yeah. Companies, public or private, or how are they financed?
Most of them are private, and there are a lot of last generation tech founders that are financing it either as angel investors or through VCs that they're associated with. They're all startup stage.
All right, I'll keep it brief, but my concern on nuclear is that it becomes such high cost power. The question is who's going to pay for it? I think, as I alluded to in talking about Exhibit B, power pricing has really gone up. It's not the commodity part of power. The commodity part of power trades on top of natural gas. So $4 gas is basically 4-cent power. And that's okay. But what has happened is the cost of pay for the facilities that make the power in utility parlance and capacity payments have just skyrocketed. So some of the best performing stocks are these independent power companies like Vista and Constellation and NRG, and that value or the ability to be baseload power as one. Just don't think it's for a commercial nuclear facility where the fuel for a nuclear facility is very low part of the operating cost, but you have to recover all that capital. The way the Vogtle plant got financed, 14 billion or 34 billion was on the ratepayers of Georgia Power. And as the cost went up, the Public Utility Commission of the state of Georgia intervened and said some part of that overrun is on the stockholders. So it'd be very hard seeing the Southern Company, which owns Georgia Power, take that hit on the stockholders. I think it'd be very hard for a private utility to undertake that kind of risk. Should the Department of Energy or the U.S. government be undertaking that risk? They talk about a program building 10 of these things for $10 billion each. But I mean, the question is who's going to bear the risk of overrun or the risk of not being able to recover much of your $10 billion cost, because it's $10 billion for 800 megawatts. I mean, a very efficient gas plant would be $2 billion or maybe $1.5 billion for that same amount. And I'm just not sure I see how that works out commercially. So we have 3 predictions here, and we still haven't gotten oil and gas. Whoever's got the pages in front or on the screen, if you turn back to Exhibit B, I have a 4th prediction here, and that has to do with gas supply. I've seen year-end commentary where they say that gas supply will be down because the price of oil is down, and consequently associated gas will be down. The reason that's important is associated gas from the Permian has been most of the increase in gas supply from 21 to 25, 15 Bs a day, and 10 of that, or 2/3 is jump. I don't think that is true. I mean, oil production may be down, but the gas oil ratio will be higher. And I'd be really surprised if gas production from the Permian did continue to increase, maybe not as much as over the last 5 years, but I think it will continue to increase. That gas production level of 108.5 BCF a day to 26, I feel reasonably confident in that. So there we have a 4th prediction. I just as soon not get into trying to predict the price of oil, because you had so much macro going on between Ukraine and Iran and, things that are not likely to happen. But over to Mike and Jason, we're only allowed 5.
Okay, well, I have one, but Hunt will probably tear this to shreds. I think you could make a case for natural gas pricing being significantly higher in 2026. We've been in this $3-ish gas range for a while now. And the question is there enough new demand for natural gas that additional increases in production to meet that demand have a higher marginal cost? And the view here would be that between the LNG exports and increased data center behind the meter power generation, you have a significant increase in natural gas demand. So far, much of the new data center projects have sort of been serviced by the existing grid. So the theory here is that eventually the grid gets squeezed and we do need more baseload power. And we do see more behind the meter natural gas power generation. So those two things, if they come together in the right way, you could see a state where gas is more like $4.50 to $5 rather than $3.50.
I'm a bit skeptical of that, but let's put that in as just supplies. And when gas averages $3 or $3.50, I'll be quick to say this time next year, oh, that was Mike's prediction, not Hunt's.
Yep, that's fair.
So we've rounded out our 5. Mike or Jason, anything else to add?
I've got a candidate for another prediction, but
Oh no, well we can have 5.5 then.
we spoke about mature economies not increasing their use of oil, and we've discussed China maybe reaching that point where demand is not growing any longer. But I think over the last 2 years, they've been in a pretty significant recession. They've had a deflationary situation there. They've stopped the relentless construction of ghost cities. I think once their economy kicks back on into growth mode, despite what the CCP's numbers say, I think then oil demand will increase in China.
Great. Well, that's 5.5. We will do next week 5.5 for tech, and the following week we'll do 5.5 for healthcare. And it's always possible that despite our best efforts between the three of us, we'll only get out to 4 predictions. But we'll try to do 5.5 the next 2 weeks in those different areas. Starting with Exhibit C, there's not really too much to add. A ceasefire in Ukraine would change these 26 numbers. There'd be more Russian production and maybe a little less of a price, but I don't think that's too likely. The 20-point plan that Zelensky's covered seems to have at least 3 or 4 points that are just non-starters with the Russians. So that's probably the outcome there. We go to Exhibit B. The price of oil has worked back a little bit. The price last Tuesday was 59. There's no backwardation, so that is the price for the futures in 26. The price of natural gas has lost a bit of ground in the past week or so. The 26 strip is $3.80, down from about $4. Exhibit A, I don't see too much news here. They of course did not get anything done on the healthcare subsidies, and apparently Schumer, the minority leader in the Senate, is on record as saying the government will not close down at the end of January. So when the House and the Senate comes back and is in session, they'll try to pass something. But even if they're not able to get much done, the government will not shut down. I think the Democrats feel they've made their point and that they're pretty well poised for the midterms, where the Democrats are trusted more on health care, and Trump did get the price of oil down, the price of gasoline down, but did not get the price of electricity on the average residential bill down. And once again, we'll get into that in a few minutes. The Democrats, I think, are pretty confident that in November they'll win back control of the House. I think there's some vulnerable Senate seats, so hopefully Zoom continues to be the majority leader rather than Schumer. But, I think things are going to be pretty volatile on the downside for the Republicans in the midterms. So as that impact Exhibit A, I think that the big, beautiful bill got done. I think that they are making some progress, Republicans. I think DOGE was a bit disappointing, the program must set up, but I do think they are making progress on holding spending, including defense spending. If you look at the estimated fiscal 26 defense spending, it's about level with 25, and that's good. The automatic things here, Social Security, Medicare, Medicaid, those will all be up some, but it's interesting. Look at this chart. People complain about Medicaid, which is the program where the federal government does about half and the state government does half. The federal contribution of that's been kind of on the flat side. So, there is progress being made trying to keep healthcare costs from increasing. The whole key here is to hold costs or hold the total budget to $7 trillion. And we should have about 2 or 3% real GNP growth in 26 and maybe 3% inflation. So that's 6% nominal. Those categories, income tax, payroll tax, corporate income tax, those will all go up, by 6% or so. And if you can hold your spending flat, we will eventually get on a downward trajectory on the deficit. And the result there will be the U.S. federal debt held by the public having gone from, say, 80% before COVID up to 102 for the fiscal year just ended. It would be terrific to see it start to trend down, 101, 100. Now, that doesn't seem like a big change, but as compared to every other economy in the world, including China, we will be outperforming because every other economy in the world, certainly the European community, certainly China, certainly Japan, will continue to increase the amount of debt relative to their GNP. So people who predict a weak dollar based on macro may be a bit surprised at what happens here. What about news on page one? All these stocks are at highs. And when you turn to the Nvidia page, Nvidia had kind of a bump last week because of an acquisition or a licensing agreement they did. But if you accept that, TSMC has ML, more or less the same. And if you turn to the software page, we'll talk in a second about the three real software companies here. Oracle, of course, is a question mark because they're so closely tied to OpenAI, and Broadcom is to a very large extent, fairly or unfairly, tied to the alternatives to the Nvidia GPUs. If you look at that array, Jason, Mike, what else do you see as we go through the year end?
I think the Nvidia acquisition of Groq, the XPU company, they call it an LPU, is interesting, but I think there are some things that they're doing that are novel, and it's probably more indicative of the fact that in future generations, and think like 3 to 5 years out, they will need more optimization in these GPUs for different things. And what Groq is focused on, GROQ, not to be confused with xAI's chatbot called Groq, GROK. GROQ is specialized in making extremely low latency chips for large language models, and they utilize slightly different architecture. High level, I think that there's some applications that we'll be able to use in future generations, and it's probably a decent acqui-hire for them as well.
Yeah.
I would add something that I think's been overlooked with Amazon is they keep releasing new generations of their Graviton processor, and this is a CPU, because all the AI's dominated the headlines, but potentially Amazon has the best CPU not on the market. They use it internally. It's kind of like Google's TPUs. They keep it internally. It's their secret sauce. They run it in AWS, and they've migrated successfully most of the cloud workflows onto running their ARM-based chips rather than an x86 Intel AMD CPU. So there's still a lot of traditional computing that occurs, and there's a lot of traditional computing that has to occur to support all of the AI development going on. And Amazon's seen as kind of missing out on the AI wave, and they are in that sense, but they're still definitely the leader in CPU cloud compute, and I think that's being missed.
All right.
I'd also
Okay.
add one of the news items from today is that Nvidia made a $5 billion investment in Intel, and they are going to co-design some products where an Intel x86 CPU will be integrated with a Nvidia system. And if you remember back when Nvidia tried to acquire ARM, part of the thought there is that they would have more control over the ARM architecture. And so this is an opportunity for them to do kind of what they've been doing with ARM CPUs, but also do it in the x86 architecture.
Since we're doing healthcare as the third in line, we don't want to be leaving our interest in healthcare inactive. Jason, give us a foretaste of what you think will happen in healthcare as it affects the companies you guys follow. It won't be next week, it'll be the week after, but what about coming attractions in terms of predictions in healthcare?
I think a lot of focus will be on the opioid epidemic, a company we don't have on the sheets, but plays in the CNS depression market. I think there's going to be a lot of discussion around how we treat depression and maybe how that changes in the coming year. Obviously, drug pricing, most favored nations. We're seeing a lot of companies come to the table with the White House to come up with plans. And the latest was, I think last week, 9 companies announced they have plans with the White House of how they're going to address the most favored nations, drug pricing, and oil prices come down in the US versus rise at the rest of the world. I haven't seen a lot of public data that's come out of those negotiations. And I think the Democrats are a little upset about that because it hasn't happened transparently, but we'll definitely know a lot more details about how that's going to occur.
Jason, do you think the Democrats grab this healthcare subsidy hangover from COVID? It seemed to have helped them politically. Is it just slogans and political maneuvering rather than substance on the Affordable Care Act subsidy? If you had a good friend who was running for Congress or trying to hang on to their seat as a Republican, what would your advice be?
I think it is all just political noise. I think, the Republican side is that we're providing Medicaid services to illegal immigrants. And on surface, you're saying that's bad. We shouldn't be doing that. We're paying for their health care already anyway. Right now, if they're not on Medicaid, and previously they were utilizing emergency services for more routine care. And that's the most expensive form of healthcare, right? And we're paying for that collectively. So the idea that we're not already paying for those people to receive care is crazy. So I think we have to subsidize them in a lower cost care environment in the meantime while we fix the system. So I know that's a hard message to send, and the Democrats are winning this messaging by saying we're going to keep your subsidy and keep your premiums down. No one wants to have a vote go and that just immediately raises their healthcare expense. So I think we need to say, just make the honest assessment that we already pay for that care and we need to keep subsidizing Medicare for them until we figure out a better way to handle it.
Right. Hardly disagree with that logic. Do you think that people like United Healthcare are signing up participants who don't even know they've been signed up, so therefore getting subsidies for people who may not even know that they're on a plan? I mean, does that type of stuff go on in health insurance, do you think?
Yeah, there's some evidence that absolutely occurred because during the pandemic, there were incentives for you to sign people up for these plans. The salespeople, if you will, were incentivized to do that, and that was absolutely occurring because they can make money by signing people up. I don't know if that's still exists now and how widespread that is any longer, but that was absolutely a problem. But there was fraud going on all over the place during the pandemic and all the stimulus we were handing out left and right. So that was just a drop in the bucket, I think.
How likely is it to pick up Exhibit A year from now and see if let's say that the economy goes up by 6%, let's say 3% real growth and 3% inflation. Do you think it's possible that the total federal contribution to Medicare and Medicaid would be a lower percentage than that 6% increase in the economy? Or in other words, without legislation, without asking elected officials to take a stance on these issues, how much do you think can be done from an administrative point of view by the types of people that have been appointed by the Trump administration to supervise Medicare and Medicaid and the administration of pharmaceuticals, so on and so forth? Is that an impossible lift to try to have healthcare spending by the federal government be significantly less than the growth in GNP in 26?
I think in the short term, it can be done. There's a lot of levers to pull to bring down drug pricing. We could start enforcing some of the price transparency in hospitals and clinics to try to get individuals and plan purchasers to be cost conscious in where they receive care and go seek out care. That would definitely bring down costs, some percentage of costs immediately. I think the longer term trend, though, it's going to be hard to fight that because all of the incentives today are aligned to keep driving healthcare costs up. So we could probably put a 1 or 2 year Band-Aid on it and pull some levers that are available. But longer term, we have to change the incentives. And the way the incentives are now is all the insurers make more money by covering larger amounts of care. So they can then charge their set 15% premium on top.
Well, that's kind of a downbeat to finish the last episode before the new year, but we promised to be reasonably upbeat next year, and we want to wish everyone a happy new year. Everyone be well and stay healthy, and take care, everyone. Bye-bye.
The views expressed on this podcast are the host alone and do not constitute an offer to sell or a recommendation to purchase or a solicitation of an offer to buy any security nor a recommendation for any investment product or service. While certain information contained herein has been obtained from sources believed to be reliable, neither the hosts nor any of their employers or their affiliates have independently verified this information, and its accuracy and completeness cannot be guaranteed. Accordingly, no representation or warranty, expressed or implied, is made as to, and no reliance should be placed on, the fairness, accuracy, timeliness, or completeness of this information. The host and all employers and their affiliated persons assume no liability for this information and no obligation to update the information or analysis contained herein in the future and may or may not hold positions in the securities mentioned.